US inflation data convinced markets that the Federal Reserve would go ahead with the rate hikes in an effort to bring down high consumer prices. In this context, the US dollar advanced across the boat. Perhaps market sentiment on the US dollar could change today following the publication of a US retail sales data. Now let's discuss what other events and macroeconomic data might serve as a catalyst in the currency market until the end of the week. The economic calendar is not too loaded with economic data, but any of the reports could assure traders to revise sentiment on national currencies. During the early Asian-Pacific session tomorrow, Australia will report on its labor market. After an unexpected decline in employment in December, analysts predicted that the Australian economy created 20,000 jobs in January, and this will encourage speculation on another round of monetary tightening by the Reserve Bank of Australia. And the robust labor market is a clear-cut sign of inflation acceleration, so the central bank will have to proceed with more rate hikes. Such prospects will boost demand for the Australian dollar. The signs of the overheated labor market were detected in the US long ago. This also fuels speculation about further sharp rate hikes. A weekly update on initial unemployment claims in the United States is likely to cement such expectations. Experts project an increase in first-time claims to the psychological level of about 2,100 last week. The report on the US factory inflation will make a more serious impact on trading sentiment. The producer price index is a forward-looking indicator that sheds light on the dynamic of the consumer price index. In other words, investors will be able to predict trends in a consumer inflation, which is the preferable gauge of the Federal Reserve to decide on further policy moves. According to the consensus, the annual PPI is expected to slow down in January. Remarkably, the forecast of a consumer inflation did not come true yesterday. Investors do not rule out the same twist in the report tomorrow. This week, investors will be able to judge consumer activity not only in the United States, but also in the UK. Unlike the United States, market participants will hardly find out positive news on the British economy after the Bank of England acknowledged the fact of a recession in the kingdom. Almost every macroeconomic report is prefaced by a negative forecast. Interestingly, actual readings happen to be better than expected, and this time investors will not be surprised to find out that retail sales did not contract by 0.3% on months in January, and the annual pace of decline was not so dismal. Nevertheless, we suppose traders will be poised to go short on the pound sterling. And how we're going to be in the short term in financial markets, we will definitely tell you in our next news releases. Subscribe to our channel and follow news with us. See you soon.